Governor, last couple of years we've had a patchy monsoon. The economy has managed to grow despite a patchy monsoon. Looks like we are in for a normal monsoon this year. So yeah, assumptions of your GDP growth, what kind of monsoon factor it is accounting in for?
No, if you see the monetary policy resolution, I don't know whether we mentioned, I think we did mention that we assume always a normal monsoon. Because monsoon, again, the uncertainty always persists. Even this year also, after setting in a bit early, for the last 15-20 days, monsoon has slightly slowed down. And currently there is extremely severe heat conditions prevailing in northern states. But the monsoon will revive according to the IMD. But for the projections, for our estimate of GDP growth, and in all respects in monetary policy, we have assumed a normal monsoon.
Governor, this is the first time we are speaking to you in a public forum. So probably from a regulator standpoint, the continuity of the government, what does that mean for a regulator?
You see, for us, it is the government. There is always a government. Irrespective of which party forms the government, there is always a government. So as a central bank, and for every citizen in the country, there is always a government. So I'll leave it at that.
Sir, everybody expects you to leave it that. Everybody expects you to leave it that only.
So
not
it
say
is on
anything beyond
expected
that.
lines, no? So I have I have played the shot which you expected.
So Governor, since we are talking about shorts, let's look at the pitch report. Global conditions are stable. If one looks at the weather conditions locally also are getting better. So is the stage now getting ready for Reserve Bank of India to do the obvious, which is you've stated that you want to do the obvious, change the stance?
This is one point which we have explained quite a lot in the monetary policy statement. Now, you see, we are maintaining the growth inflation balance. And in that growth inflation balance, the interest rates, the repo rate is 6.5%. And it seems to be working because growth continues to remain robust. But inflation is moderating very, very slowly. So if you are expecting a faster moderation of inflation, then we have to take much more drastic measures. In terms of stance, in terms of rate, we'll have to take a much more drastic measure if we want inflation to be brought down. But then we have to also weigh what would be the growth sacrifice that we would be making for the economy. In fact, if you recall, towards the end of 2021 and early 2022, there was all-round clamor as to why the Reserve Bank is not increasing the rates. Before March of 2022, there was a considerable body of opinion outside saying that the Reserve Bank was falling behind the curve. And that view seemed to be gaining traction. But we were very single-minded that we have taken the right decision, and at that point of time, towards the end of financial year 21-22, that is, let's say, from about October to, or rather from December 22 to December 21 to just in the 4-5 months preceding the Ukraine war, we wanted growth to revive. We wanted clear evidence that the growth has revived. So therefore, we refrained from increasing the rates or tightening the stance. Because our job is to ensure a proper, appropriate balancing between growth and inflation. At this point of time, there is again a clamor that, one should change the stance. But we want clear evidence that inflation should moderate. And moderate, we need more evidence that inflation should moderate and perhaps a little faster. As I explained, core inflation has come down, but the biggest uncertainty is food inflation. The average food inflation has been 8% in the last 6 to 7 months. And that is slowing down the disinflation of the headline numbers. Headline still remains at 4.75 as per the latest number. And then in the second quarter, it is likely to go down to 3.8. But again, it will go up to 4.5, 6. So you are within striking distance of 5%. And if there are a series of weather events or something goes wrong on the weather front, the vegetable prices and other prices of the key vegetables, the prices may go up. The food inflation again may go up. International food prices, I talked about international metal prices going up. In fact, the global food price index has also started going up. So therefore, it could even touch 5%. So therefore, it will be too premature to talk in terms of changing the stance. I think I used the word saying that any form of adventurism should be shunned. At this point of time, we should avoid any form of adventurism. It's better to stay the course and be watchful and take the step as play ball by ball.
So in your terminology, the inflation elephant has gone for a walk. It's too early to assume that it's gone in a hibernation.
You see, the elephant is definitely going towards the forest. Okay. No doubt on that. But it's taking its own time. So we have to be cautious and watchful.
Okay. Governor, the dividend from RBI, 2 lakh crore, is it in sync with the Reserve Bank of India's balance sheet, which is getting expanded, Governor?
You see, the balance sheet size obviously is growing by about 10% or so annually. But this year, you look at the annual accounts, they have been already published. It's there in our annual report. The annual statement of accounts have already been published. And it's mainly our incomes from foreign assets have gone up. Significantly, the income from foreign assets have gone up. That is mainly decided by the fact that all the advanced countries or all the countries where we have deployed our forex reserves by investing in their securities and government securities and treasury bills, the interest rates have gone up there. So naturally, in all our investments, we rotate our investments also quite frequently. So naturally, the income from foreign assets have gone up significantly, and it is determined. It's just a arithmetical number that we have to arrive at, following the principles laid down by the Committee on Economic Capital Framework, the Bimal Jalan Committee. According to that recommendation, it is mainly out of, I would say, the foreign assets income.
Governor, Reserve Bank of India's primary goal is to maintain financial stability. But I'd like to draw your attention to the financial markets. The financial market cap right now is at 5 trillion. The real economy is at 4 trillion, which means the financial economy is now higher than the real economy. What do you make of this big expansion in the financial economy? As a regulator, we want to hear your thoughts.
No, you cannot sort of draw a conclusion from these numbers, from the headline numbers of nominal GDP and the financial market. You cannot draw a conclusion. There are much more to it. There are much more nuances to it. But all the parameters and indicators of our economic, of our Indian economy and our financial sector, they at the moment look very stable. What you are perhaps implying is that the question that is some part of the market or some segment of the market, is it getting overheated? So that is, I think, to put it plainly, I think that is the question which you are asking. I think SEBI is engaged with that. So let me not, intrude into SEBI's territory and start talking about the stock markets. I think SEBI is fully seized of what's happening in the markets.